Morning, everybody. The Tuesday, July 30, 2019 Veterans Land Board meeting will now come to order. First item on the agenda is approval of the minutes from our last meeting on April 25, 2019. Mr. Kobos is no longer with the board, and Mr. Moody was not in attendance, so I will respectfully confirm the minutes since I've been the only one to review those, and will confirm those for the record. So we can move to the next item. One of my favorite jobs is to welcome new board members. So this morning we welcome Judd Scott, who has passed the vetting process with the Senate and the nominations committee, and was just recently briefed. We're excited to welcome him to the board and continuing our service to military veterans here in Texas. So with that, we can do the official honors and swearing in Mr. Scott. Do we have official language?
Stephanie's got.
Repeat after me. I, Judd Scott,
I, Judd Scott,
do solemnly swear
do solemnly swear
that I will faithfully execute
that I will faithfully execute
the duties of the office of the Veterans Land Board
the duties of the office of the Veterans Land Board
of the state of Texas,
of the state of Texas,
and will to the best of my ability
and will, to the best of my ability,
preserve, protect, and defend
preserve, protect, and defend
the Constitution and laws of the United States
the Constitution and laws of the United States
and of this state.
and of this state.
So help me God.
So help me God.
Congratulations.
Thank you very much. Good to be here.
Yeah.
Thank you.
So with that, we will move to the next item on the agenda, number 3, consideration and possible adoption of resolution authorizing issuance and sale of Texas State Veterans bonds.
Thank you, Mr. Chairman, members. For the record, Rusty Martin, Chief Investment Officer. Congratulations, Mr. Scott, and welcome aboard. We look forward to working with you.
Thank you.
So approval of this agenda item would constitute your approval of the issuance and sale in one or more series of installments of up to $250 million in tax-exempt new money general obligation bonds in the Veterans Housing Assistance Program during 2020. In July of last year, the board approved a one-year resolution authorizing the issuance of up to $250 million in bonds in the VHAP during 2019. Subsequently, the board closed on its $250 million of State of Texas Veterans Bonds Series 2019 in April of last year. As you know, the program is limited by federal tax law to no more than $250 million in new issuance per year, and demand is such that staff continues to expect to issue that $250 million per year for the foreseeable future. Therefore, it's time again for the board to approve a resolution authorizing the issuance of up to $250 million in tax-exempt new money general obligation bonds in the VHAP during 2020. As you recall, the board typically issues bonds that are structured as synthetic fixed-rate bonds, which are created by issuing variable-rate bonds that are effectively converted to fixed-rate bonds through the use of floating-to-fixed amortizing interest rate swaps. Except for 2009 and part of 2010, the board has used this structure in virtually all of its new money transactions over the past 17 years, and it's consistently allowed the board to achieve a true interest cost on those bonds that averages approximately 125 basis points below the true interest cost that would have been associated with issuing traditional tax-exempt fixed-rate housing bonds. Therefore, I'm recommending that you authorize the issuance of up to $250 million in tax-exempt new money general obligation bonds in the Housing Assistance Program from July 30th of this year to July 29th, 2020. In addition, I recommend the bond's final maturities not exceed December 1, 2051, and the bond's true interest cost not exceed 5%. Again, as I said earlier, this is an item that you do approve annually and have approved annually for a very long time. I'm happy to answer any questions you might have.
Any questions from the board?
None.
Just one question.
Yes, sir.
So this
authorizes up to 250 million. In the last calendar year, did we actually issue up to that $250 million cap?
Yes, sir. We've issued the full $250 million every year for the past 15 years or so.
Okay.
And we expect to continue that.
Any other questions from the board? Can I entertain a motion to approve the recommendation?
I move we approve.
Second.
Motion is made, seconded, and carries unanimously to approve item number 3. Next item on the agenda is number 4.
Thank you, Mr. Chairman. Members, this item, also agenda item 5, are part of a package that we typically get approved every year by the board, usually around July of each year. So again, just like item 3, this is business as usual for item 4 and item 5. Approval of this item would constitute your annual renewal of authorization for staff to execute certain interest rate swap transactions upon notice to the chairman or the chief clerk for a 1-year period. As you're aware, financial markets continue to be highly volatile over the past year, and it's likely that they will remain so in the future. Of course, volatile markets often create attractive but very fleeting opportunities for entities that are experienced and positioned to take advantage of them before they're arbitraged away by other market participants. However, the board's quarterly meeting schedule is not conducive to executing quickly upon opportunities before they disappear. So in recognition of this problem, the board authorized staff beginning in January of 2009, so 10 years ago, to execute interest rate swap transactions as opportunities arise upon notice to the chairman or the chief clerk, and that's for a rolling 1-year period. In May of 2019, we did take advantage of an attractive opportunity to terminate an existing swap. It was about a $32 million notional amount basis swap that we had executed in October of 2009 with Goldman Sachs. And that termination generated net proceeds of about $800,000. And when combined with a positive cash flow that was received over the life of the swap, which was about $830,000, it resulted in total net proceeds from the transaction of about $1.7 million over the life of the swap. We strongly believe that the annual adoption of this resolution will continue to provide us with a powerful tool that affords us the flexibility that's necessary to take advantage of these very short-lived, attractive opportunities as they arise. Therefore, I'm recommending that you authorize staff to execute interest rate swap transactions upon notice to the chairman or chief clerk for a 1-year period beginning July 30th, 2019 and ending July 29, 2020. I'm happy to answer any questions. And again, this is an item that is business as usual. Thank you.
Any questions from the board?
None.
Could I entertain a motion to confirm the recommendation?
So moved.
Second.
Motion is made, seconded, and carries unanimously to approve item number 4. Next item on the agenda is number 5.
Thank you, Mr. Chairman. Members, as I mentioned earlier, this item is the final item in a package of 3 that we typically bring to the board for annual approval. This agenda item will constitute renewal of your authorization, your annual authorization of 2 things: a substitution of existing liquidity facilities or the entrance into new liquidity facilities associated with existing or new bond issues in both the Housing Assistance Program and the LAM program, and also the authorization of the amendment of any resolutions associated with such bond issues that may be necessary to complete the substitutions. Again, in keeping with past practices, the board approved a resolution in July of last year that authorized staff to substitute over a 1-year period as necessary various liquidity facilities provided by liquidity providers on existing VLB variable rate bond issues, and and to execute new liquidity facilities related to any new bond issues during the 1-year period, and to amend or supplement resolutions associated with any of those bond issues. Since that time, we have arranged 25 liquidity facilities with State Street Bank and Trust Company. between July and November of 2018. The total notional amount was approximately $1.1 billion, and that supported 25 existing VLB variable rate bond issues that were associated with a direct purchase that we converted back to floating rate bonds. Number two, we did a $250 million liquidity facility with JP Morgan Chase Bank in April of this year to provide liquidity on our Series 2019 bonds. Although it does remain somewhat difficult to find large creditworthy banks that are willing to provide liquidity at a reasonable price, we have been able to do that. It helps when you have a self-supporting GO-backed AAA-rated facility program like ours, but we certainly expect to continue to meet the liquidity facility needs that we have during the next year at reasonable pricing. Therefore, I'm recommending that you authorize staff to substitute existing liquidity facilities or execute new liquidity facilities for a one-year period from July 30, 2019 through July 29, 2020, and to amend or supplement certain bond resolutions necessary to accommodate such substitutions during the period. I'm happy to answer any questions you may have. Again, this is business as usual for us.
Any questions from the board?
I move we approve.
I'll go ahead and second. A motion is made, second, and carries unanimously to approve item number 5. Next item on the agenda is number 6.
Thank you, Mr. Chairman. Members, so this is an item that we put on the agenda for every board meeting. Sometimes we recommend action, sometimes we don't. I'm not going to recommend any action today, but I do want to talk a little bit about housing demand in the program. And just I'm going to throw some numbers at you just to sort of bring you up to date on where we are, and then talk about going forward what I think we probably need to look at. So in fiscal year 2018, we made $575 million in new loans. That was about 21% above the previous 3-year average. In the first 10 months of this year, we've made $693 million in new loans, well above what I call our normal range, which is $500 to $600 million per year. And at current demand levels, we expect we would end the year at around $775 million, so substantially above where we would normally be. We can do that, but we can't sustain that every year going forward. So we made about 2,075 new loans in fiscal year 2018. That was 15% above the previous 3-year average, which is about 1,800. That's 15% above the previous 3-year average. We've made 2,460 new loans in the first 10 months of this year. So again, we're running well above the average. So basically what I'm saying is we've effectively returned to normal historical demand levels in the program. And in fact, we're running significantly above normal levels in terms of both the total dollar amount and the number of loans. As you'll recall, our current weekly reset process involves setting a base rate that is 15 to 65 basis points below our benchmark. And then eligible disabled borrowers are allowed a 50 basis point reduction to the base rate. We've been setting the base rate at 15 basis points below the benchmark for about 3 months now, and it has produced a slight decrease in overall demand. Therefore, I'm not recommending any changes at this time. However, if the next 3 months don't produce a more substantial reduction in demand, keeping it at 15 basis points below the benchmark, I will likely see approval from the board at your October meeting to reduce that range down from 15 to 65 basis points down to 0 to 65 basis points. So to put it in context for you, I'm looking for future demand is based on the pipeline, which is based on rate locks that are put into place, because the rate locks are an indicator of what's going to come. about 85% of our rate locks actually pull through into loans. I'm looking for about a $13 million a month rate lock pipeline, and we're currently running at about $15 million a month. So if we do $13 million a month, that puts us somewhere around the $700 million range in rate locks per year. And so 85% of those pull through, and that gets us in the $500 to $600 million range. So it's a subtle difference, $2 million a week, but having the ability to move that range down to 0 basis points would probably have the impact that I'm looking for. But again, we're going to give it another 3 months and see how it works. And if it doesn't get us down that range, then I'll be back in October and ask you to reduce that down. So this is a non-voting item today, but I'm happy to answer any questions.
When you talk about it not being sustainable, we're talking about on the funding side, not like the operations of actually running.
Right, I'm talking about the funding sources.
And are there any ways that we could, over the medium to long term, remove some of those constraints in order to be able to service more veterans?
There are more structural constraints, and of course, it centers around the federal limit on the amount of bonds that we can issue in the program. The one wild card is our ability to sell loans, but we don't control that. So we pool what we can into Ginnie Mae mortgage-backed securities on a periodic basis and sell those, but we don't have a great deal of our product that fits in that. So mostly through loan sales, we're talking about whole loan sales. And we have been fortunate to have some interest from actually a Texas bank that we did a pretty sizable deal with them. It's over $300 million a couple of years ago, and we're very near the end of a deal with them now that will be somewhere around $500 million. So those are liquidity events within the program that extend the pool and extend the source, but again, there are structural constraints that we just can't do anything about. So we will never be in a situation that I can foresee where we would tell a veteran that we don't have money to lend you. That just would not happen. What we do is we would control the demand primarily with the interest rates. So that's what I'm talking to you about here.
Rusty, could you refresh my recollection on the underlying 30-year benchmark, the FHA-VA? Is that pegged at all, or does that react to a potential announcement, say tomorrow, in terms of what the Fed will establish their rate, and how would that potentially impact your decision in 3 months?
Well, it's always difficult to try to determine what kind of effect movements in short-term rates are going to have on longer-term rates, particularly mortgage rates. Mortgage rates are volatile anyway. So I expect that there will be some impact, but it won't be on a basis point for basis point move. As you know, right now, the yield curve is inverted. Short-term rates are substantially higher than longer-term rates. So in some respects, the market is looking into the future and projecting lower rates and has sort of moved ahead of the Fed, if you will. And there's a lot of debate about whether the Fed should or shouldn't decrease rates right now. The market thinks they will. In fact, the market thinks they will decrease rates several times over the next year. I think the latest I saw was and then the market's expecting like 68 basis points, somewhere around that range. I don't know if that's the case. Well, I'm not going to make a prediction about that. We will see. But I'm giving you a long answer. But yes, it's reasonable to expect that there would be some pressure on rates as a result of the change, but not necessarily because they really just don't move each other that much. And we're already at historically low rates anyway. So if your next question is how's it going to affect loan demand if the Fed lowers rates, I don't think it's going to have much impact. I think it will be pretty much what it is. And again, since we have a sort of a target range, that works for us, we're going to be manipulating the spread anyway. So, we're sort of in a reactive mode to whatever happens in the markets to control that demand.
And then in the memo, when we use the term normal levels, we look at a range of 3 years. Is that what you typically use as your criteria for?
When I describe normal, I'm talking about 500 to 600 million per year.
Okay.
I just have one question. In October, when we come back to see how things are working, will we be looking to see the impact of raising the rates to decrease the loan amount? Are we looking at newly initiated loans or loan applications? Is that the number we look at?
That's what I'm looking at.
Okay.
When we have this discussion about whether or not we need to adjust that range, I'm looking at the rate lock pipeline, because that's a 90-day predictor of where the program's going to go.
Thank you.
No other questions at this time. This is a non-action item. Next item on the agenda is number 7.
Thank you, Mr. Chairman. Members, this is a non-action item. It's the quarterly investment report for the period ended March 31st of 2019. That's for information only. I'll just give you a brief summary of sort of the economic and market conditions, then we'll talk about the performance of the portfolio. As you may recall, first quarter GDP increased at an annual rate of 3.1% during the quarter, after increasing 2.2% in the fourth quarter of last year. And the unemployment rate ended the quarter at 3.8%, down from 3.9% at the end of 2018. The Fed left its funds rate range target unchanged at 2.25 to 2.50% at its March meeting. And it also sustained its balance sheet normalization program concerning the reinvestment of principal payments from its holdings in agency mortgage-backed securities and the rolling over at auction of maturing Treasury securities. As you'll recall, in October of 2017, the Fed began its normalization program by rolling over at auction the amount of maturing Treasury securities that exceeded $6 billion each month, and reinvesting in agency mortgage-backed securities the amount of payments from their holdings that exceeded $4 billion. Since then, they've raised those investment thresholds several times. Now they're at $30 and $20 billion respectively, so they've raised them significantly. And they voted at their March 19th meeting to leave those target thresholds in place. They also agreed that the timing and size of any future adjustments in the fund's target will depend upon their assessment of what they call realized and expected economic conditions relative to maximum employment and symmetric 2% inflation objectives. As you know, and as Judd and I discussed yesterday, the primary investment strategy for this portfolio focuses on providing liquidity and cash flow necessary to meet continued loan purchase and debt service requirements, and focuses only secondarily on maximizing total return while preserving principal with high-quality investment instruments. The duration of the portfolio decreased from 5.5 years to 5.2 years during the period. Our target is 3.5 to 4 years, and that will be variable according to loan demand and according to debt service requirements. Turning to page 3, you've got the tables there, and we're going to look at primarily table 2 is what we'll focus on. So comparing the performance of the portfolio with the benchmark. So the portfolio returned 1.55% for the quarter versus about 0.9% on the benchmark. 1-year total return on the portfolio is 3.49% versus 2.54% on the benchmark, so outperforming the benchmark by about 100 basis points. And if you'll look down to the bottom, table 3, you'll see that the average annual total return since inception, which is almost 20 years now, is 3.32% versus 2.36%. So again, about 100 basis points difference. So the portfolio is performing well. It's meeting its objectives. This is a non-action item, but I'm happy to answer any questions.
Any questions from the board at this time? Next item on the agenda is number 8.
Thank you.
Thank you, Rusty.
Good morning, Mr. Chairman, members of the board. For the record, my name is Charlotte Mumford. There are no appeals before the board today.
This is a non-voting item, so next item on the agenda is number 9.
There were 15 tracts offered during the forfeited land sale online bidding period of June the 3rd, 2019 through July the 23rd, 2019. We received a total of 112 bids, resulting in 14 high bids. Staff is requesting the board award all high bids that meet qualifications for the land program. I will be happy to answer any questions you may have.
Any questions from the board? Could entertain a motion to confirm the recommendation.
So moved.
Seconded.
Motion is made, seconded, and carries unanimously to approve item number 9. Next item on the agenda is number 10.
Staff is requesting that the board take forfeiture action on the resolution before you, except accounts where sufficient funds are received to avoid that action. 10 accounts are being presented for forfeiture action today. I will be happy to answer any questions you may have.
Any questions from the board? Could entertain a motion to confirm staff recommendation.
So moved.
Second.
Motion is made, seconded, and carries unanimously to approve item number 10. Next item on the agenda is number 11.
Staff is requesting the board take action on the resolution before you. The resolution lists accounts to be considered for order for sale action. There are 6 accounts that they will become the tracts for the next forfeited land sale. We are requesting the board's authority to pull any tract that fully reinstates prior to the sale date.
Any questions from the board on the resolution?
I move approval.
Seconded.
Motion is made, seconded, and carries unanimously to approve item number 11. Or I'm sorry, number 10. Next item on the agenda is number 11. Or was that 11? I'm sorry. Next item on the agenda is number 12.
Staff is requesting that the board set the next quarterly electronic forfeited land sale bidding period to begin September the 3rd, 2019 at 8 a.m. with a bidding deadline of October the 22nd, 2019 at 5 p.m.
So moved.
Second.
Motion is made, seconded, and carries unanimously to approve item number 12. Thank you. Next item on the agenda is number 13.
Good morning, Mr. Chairman, members. For the record, my name is John Berkeley. This is an action item for the board, and is to request approval of the Veterans Land Board to accept a 12-acre donation of land from Tarrant County Commissioners Court for a future Texas State Veterans Home. The Tarrant County Commissioners Court has agreed to donate 12 acres of land for a future construction of a Texas State Veterans Home. The terms of the agreement are confirmed, and the VLB will begin the execution of the document. Tarrant County Commissioners Court will approve the property transfer during their Commissioners Court meeting on August 6th. The location is ideal as it is adjacent to the VA clinic. The property is located off Circle Drive and Joby Rushing Road. The site is suitable for a 120-bed skilled nursing facility. The property does have a deed restriction requiring that it be used for the public good, which the proposed Veterans Home will fulfill. The Commissioners Court also requests a reverter clause that if for some reason the state of Texas or Veterans Land Board chooses not to build a state Veterans Home, it would revert back to the county. We are in the process of submitting the required grant work for the Veterans Administration. The VA typically releases their priority list, between December and March, and the funding letters are typically released in September of 2020. I respectfully recommend the board accept the donation of 12 acres of land from Tarrant County Commissioners Court for the future construction of a 200-bed Texas State Veterans Home. Happy to answer any questions.
Thank you for the update, John, and really appreciate the hard work you and the team have put into securing the site. I know it's been a long road, but we're getting a lot closer.
It's an excellent parcel of property, probably one of the best sites we've had so far, so.
I had a question with respect to the reverter language. Is there a time certain in terms of construction dates that they've placed in
They
the
have a
language?
3-year limit on it, but it's renewable. If for some reason the VA doesn't fund us this year, then it would stay on the priority list. And so we can work with the county on that if our intention is to indeed build that home.
And then for other homes that we have developed in the history of the VLB, have we developed even with that reverter type language when?
We did actually for, when we were getting ready to build the Houston home, our property was actually located in Fort Bend. And it was with the state school, and it had the reverter, and we found out that the soil conditions were so bad, we actually ended up giving it back to the state school.
Does that 3-year period seem realistic as we're completing the Houston home this year? And
I believe it is simply because of the number of underserved veterans in the Fort Worth, Dallas-Fort Worth area. It's over 100,000 when you count the number of over 65, and that would put us, and it's competitive across the country. Texas has the second highest number of veterans in the country, and typically we go first or second on the list when it comes to these projects.
And then in terms of due diligence, we would begin a fresh round of diligence after, in terms
Absolutely.
of construction. And remind me again on utilities, I mean, it's pretty well located in that respect, right?
This is located right next to the VA clinic. All the utilities run adjacent to the property. And so it has great access. It's next door to a dialysis center. So many of the services that we would be utilizing are within a mile radius. So that's ideal for transportation costs and safety for our veterans.
Any other city action required beyond the county, or
We've had wonderful cooperation with Fort Worth, but also with Tarrant County officials. They have been more than accommodating to construction services, providing records, providing any type of utility information that we need. So it's probably been the most well-received development we've had so far.
any other questions, comments from the board? Thank you. Well, we're excited about it. If Tarrant County is watching, we're thankful for the partnership. And I'm sure some of them are
Do you need a
streaming
vote?
live right now. We
do need a vote?
Yes, and so I was getting there. I'm a politician. I'm supposed to use this platform. Come on, John.
Who's first?
In the interest of efficiency, I'll go ahead and propose that we confirm the recommendation from staff.
Second.
Excellent. Thank you very much.
Motion is made, seconded, and carries unanimously to approve item number 13. Thank you, John.
Thank you.
There being no further business before the Veterans Land Board, the meeting is hereby adjourned.